GBBC brings together the private sector, the public sector, and people in the academy to have hard conversations about what the law should look like tomorrow.
We are seeing growth and dynamism in so many areas, whether it's artificial intelligence or quantum or the blockchain. The innovation that's coming out of industry and out of our innovators, our inventors, our creators is driving public policy because they are coming up with new ideas and new solutions to old problems.
So from a progress standpoint, we've seen the last year and a half or so on massive amounts of progress in the crypto ecosystem and blockchain, whether it's through the signing of the Genius Act, obviously providing a U.S. regulatory framework for stablecoins and issuers in this space. We've already passed market structure out of the House last year. We also had the Presidential Working Group report that was released last summer. Within the report, there was 100 or so recommendations on how the U.S. will become the crypto capital of the world. All those gears are on full effect and rolling right now.
We started off with a product called the On-Chain OS, which essentially exposes the tech stack behind our wallet and allows developers to develop applications that can cut across 100 blockchains. And on top of that, we've built the Agentic Trade Kit, an open source MCP software that can be used by developers to execute strategies on chain. And our latest development has been an agentic wallet, which essentially is a wallet that can be used by AI agents. So we're developing the foundational infrastructure for the agentic economy, so to say.
We need to complete the cycle that we started last summer with the Genius Act in setting U.S. legislative foundation and now regulatory guidance for stablecoin issuance. Now we need to follow that with formally structuring the market for digital assets in the United States, drawing clear lines between and among various regulators, but also drawing clear definitions around different types of products and services so that there can be clarity within the industry, there can be compliance with rules and guidelines, and we can see who is willfully acting outside of those boundaries.
Our goal is to try to see if we can use blockchain technology to put all real property transactions in. If you go on vacation and come home and there's a squatter in your home, you call the police will knock on the door, and if they show them a fake lease, the police are not in position to adjudicate that on the spot. You have to go get a hotel while this goes through the courts, and it can take several months. And all of that has been exacerbated by the use of AI, because with AI, I can create a fraudulent lease, a fraudulent rental agreement really fast. By looking at broader use cases for blockchain, but also narrowing down to a specific instance that we think could benefit public safety and help retain home ownership for many people, I think it'd be a good thing.
So we had some successes over the years. 2017, exempted money transmitter license from virtual currencies, they were called then. One of the first states to pass UCC Article 12, which deals with digital assets. We passed the first strategic reserve bill, so our treasurer is able to purchase digital assets above a certain market capitalization. We've passed legal personhood for decentralized autonomous organizations, which are DAOs.
The adoption has obviously, and innovation has evolved, and it's going in a direction where policymakers and regulators are adapting and responding to the market needs and making sure that innovation and companies are not only having the regulatory clarity that they need as their innovation is evolving, but also making sure that residents and consumers are protected. Innovation is great as long as it's responsible innovation, right?
A great period right now to be in the space, certainly here in the US with the passage of the Genius Act, potentially looking at further market structure changes. A lot of interest in how traditional institutions can integrate on-chain information into their existing business models. Obviously, the crypto native firms are continuing to grow. There's been a lot of movement in things like stablecoins, tokenized deposits, and a lot of efficiencies being gained by the use of this new financial market infrastructure to facilitate financial transactions, including things like payments, cross-border, and the rest.
You have these neo-financial institutions, right, digital asset native firms, who want access to institutional liquidity, access to traditional financial markets, and find themselves grappling with what I would call a culture of compliance, or the role that those institutions, that banks play as avatars of regulatory compliance, as gatekeepers. They also need to grapple with that, figure out how they're going to play that kind of a role. So it's interesting because you have some very exciting things happening, banks adopting things that will drive efficiencies in their operational process, these new institutions actually understanding what it means to be a regulated player in capital markets, and I think the technology opportunities are huge.
The core belief that I have is that financial institutions, as they adopt blockchain, finance becomes faster, more efficient, but we need to have on the risk side the same efficiency so that it scales at the same rate as kind of the efficiencies.
We're in a new chapter, obviously a more mature chapter. We're past, the JPEG NFT chapter, and we're getting to real solutions that impact legacy industries, and that's very exciting.
I led the first blockchain use case at FedEx in 2017, and I've been doing it full-time since 2018. And so we've had a number of use cases that we've done, but we also realized very quickly that this is going to have to scale for the world. So we're focused on open, interoperable, and harmonized standards for movement. Whether that's us, our competitor, anybody else, we have to create a common language. It has to be strategic and scalable.
It also shields some of this information. Like the bill of lading will oftentimes say the exact quantity and the description of the item and how much it was to weight and how much it costs. You don't want everybody to see that. It has a lot of sensitive information on it that if it were handed to external people, they could extract numbers and information off of it that they could in the future serve as a fraud agent for somebody trying to be able to steal from them. And that's where this issue comes in, because the labor in this industry is typically, paid $12, $15 an hour to be able to work in a warehouse. But if they can make a phone call to a buddy that takes the truck driver position on that load and they come steal a $500,000 load and bring it to another warehouse, sometimes that becomes, the motivation as opposed to the $12 paycheck.
I think some people tend to only think of innovation in things that make people money or things that transfer people money. But in the world of RegTech, there's actually quite a few incredible things that are being built to let us do regulations, safety, trust, compliance better. And so the innovation goes all the way from payments, which we spend a lot of time talking about too, but how do we make things safer? How do we increase trust? Innovation everywhere.
I see this as just another development. We've had many of them over the years. I think this will enable participants to have easier, more efficient access to their securities, at least held with us. But then more broadly, the ability 24/7 to move their assets, to be able to transition them from one investment to another with fewer steps in the process, creating greater liquidity and more opportunities.
I think adoption is growing by leaps and bounds. Part of that is companies are recognizing there are lots of things they can do with blockchains. People understand, there's all this public infrastructure that I can build on. I can do my own thing with it. Part of it is that governments and regulators are allowing people to breathe a little bit with blockchains and do different things with them. So I think there's all of these factors that are sort of lining up to bring us a really good set of adoption coming up.
I've just learned so much today, in particular about the supply chain. I had no idea how much it could benefit, and the companies that are involved in the blockchain can benefit from blockchain technology, artificial intelligence, and I've learned a lot about various pieces of legislation that are going on in different states and at the federal level that are helping to bring this technology to more applications, not just in the US, but also globally. All of that has been very educational, very interesting, very exciting as we really start to see some big changes happen in blockchain technology.